Greetings, Dr. Jeffrey Scott, and this is my Market MRI Pro update for Wednesday, February 19th, 2025. Sorry I missed last night. As I said on my wealth charts video for the morning, two phrases that should not be used in the same sentence: Dallas Fort Worth International Airport and icing of airplanes. Big delays. Got in too late to actually get anything done. Let's take a look at what we saw on Wednesday. Um, rotating higher, new all-time high in spiders and Qs. At some point, this market's going to collapse. Is it going to be February 26th, the day after, or the day or thereafter, the day after NVIDIA earnings come out? It just every day when it looks like it wants to weaken, sell off, gets a push at the end. Mixed volume, as we'll see. More decliners than advances, not good signs, and approaching double tops. So lots of reasons to still be concerned, but as they say, markets like to climb a wall of worry. As always, this is for educational purposes only. Anything I recommend should be taken in the spirit of education, not investment advice. The intent of the video is to demonstrate the tools of top-down analysis and how I apply them. Trading involves risk. You are solely responsible for any investment decisions you make. I may own or intend to buy or sell any stock mentioned in this report. Trading stocks and options should be considered risky and should consult with your financial advisors before making trades. I have tools in multiple platforms. We'll be looking at the Market MRI Pro platform this evening. If you're new to me, hit the like, hit subscribe, hit the alarm so you know when I post them. But even better, join my Google group. It's called Top Down Trader, and I post videos almost every night. I sometimes put them up on YouTube, but not always. It's free. I have no plan of ever charging to be a member of this. In fact, I'll even give you special educational programs, and I'll give you coupons when I launch my Market MRI Pro. So, what's wrong with that? Um, I used to email my friends and family my notes, and I start getting bounced as spam. So that's why I started the Google group, in case you're wondering. Now, the leaders index, which I put together November 24th, of stocks that were um, leading the market at the time. And typically, when the leaders index keeps working, the markets go higher. When the leaders index breaks down, the markets go down. And the leaders index really went sideways and kind of gave us a cup and a handle and a breakout here. So they're sort of, didn't do much the last couple of days. Maybe a reversal candle on Tuesday and a down day on Wednesday, but they're still higher than where the market opened on Friday. So I'm not willing to give it up just off all-time high. So the leader index is still there. So let's take a look at what's new in the market. I guess the first thing is the Spider Weekly. And this doesn't count until the market closes on Friday. But the bongo has flipped. The price is above the WMA, and now the Spider looks like it's going to join us as in a buy signal. It doesn't count until the end of the day on Friday. You could see the 3-week, 3-month new high, new lows are middle of all of these, so none of these are so extended that they're at risk of pulling back on that basis alone. The weekly Qs and diamonds are in buys, and the Russell remains in a sell. When we look at the daily timing model, um, we're getting close to a change here, and that change in the daily is, well, we got the change. You could see that the Russell turned back to a buy on the move in the markets on Tuesday. Gave up some on Wednesday, but both the bongo and the price in the WMA have to flip at the same time, or both one already flipped, the second one flips for it to be a signal change. So all the short terms are in buy, and it looks like we're getting better on the weekly. So on that basis, maybe we should be uber bullish. I'm not. I mean, markets love to climb a wall of worry, and I see a lot to be worried about, but it's hard to ignore the strength. If we look at the US index ETFs, note to the beta testers, I'm not sure you've been pushed this version, but I can now pop out any of the indexes or any of the charts and take a look at them. So I'm looking at the spiders here, and the double top area. I know that I saw somebody talking about that tonight. We've broken out from a double top range. So um, we topped out in here, we topped out in here. Have we broken up enough, or is that still a concern? It looks to me like it wants to go higher. You could see it was up 0.24% in the market on what day was today? Wednesday. The Qs, and oh, by the way, that's an all-time closing high. The Qs, all-time closing high on Wednesday as well. Definitely in a double top area. And there are a lot of people that say you sell double tops. All right, so that's what we're going to be watching in the market on Thursday. Diamonds, a little bit of a trend line here. I like to see them break out. Have they broken down? No, they're still above the 50. They're right around the 17-day. Still looks fine. They were up on the market 0.17 on on Wednesday. Like to see them break above that trend line. That's the Dow. So these all look good. The Russell's always been, not always, but of late has been the trouble child. And you could see that ever since setting an all-time high, the Russell's pulled back. Got to get above the 50 to get me excited. And right now it's just bouncing around it, and it's been struggling with it now going back ever since it dropped below back here in December. So the Russell's the weak sister, and it was down in the market a bit, 0.34 on Wednesday. We see the VIX is going nowhere, it was down 0.65, and the dollar looked like it was going to be a lot stronger, it finished up 0.17, but you notice the dollar traded higher and then pulled back. So not as bullish a candle as it looked like earlier in the session. That's important because strong dollar, bad market, or could be bad market. If we go to the commodities, we'll see that gold remains strong while silver is giving a little bit of a consolidation. Is oil ready to take another run? Well, it looked like it was early, but it closed at the bottom of the session, but it was still up 0.77. Natural gas looks like it's real. I talked for months about how it kept failing at the 200. I wanted to see a retest. Well, we got two retests. And then if we look at the 10-year was down, well, actually the 10-year, blow this up because see if that was up or not. 10-year was down a bit, down 0.18, 0.2 in the market on Wednesday, while the 30-year gapped up higher, but actually closed relatively flat. Looks like it was up 0.06. We're watching rates closely. We're watching the dollar closely because if they start going higher, that's going to be bad for the U.S. stock market. If we look at how the market failed, we go to the daily briefing. So let's start here. You can see the spiders led, Russell lagged, VIX was down. If we look at from the ETF perspective, healthcare, staples, energy, utilities, real estate, a pretty defensive looking picture in the market on Wednesday, although the only thing that was down was materials. Even though tech was not on the top, it was 0.12. Over here, you could see, and even up here, the sign that the market's finished in the upper part of their closing ranges, just showing you that they opened up lower and finished just off their highs. From a theme perspective, telemedicine and telemedicine and digital health were up 2.33, followed by Internet of Things, solar, global tech, genomics, biotech, data centers, oil and gas, renewable energy. So energy is one that was strong up here. So was the internet. If we look up here, we could see that short term at 1 month, there were more new lows than new highs on both the NYSE and the NASDAQ. Um, really not a lot either way as you look at different time frames. Here we could see we had less sectors, industry groups positive compared to the prior session. In the SP 1500, 44% of the stocks were up, 42 in the NASDAQ, 40 in the NYSE. So even though the indices were up, there were more stocks down than up. That gives you a sense of the internals. I look at the buckets, looking to see if I have any signals suggesting that I'm extended to the upside or the downside. And you can see that we now have 8% of the stocks below versus 6 the prior session. On the S&P 1500, it's 9 versus 7 a day ago. 7 versus 6 on the NASDAQ, 9 versus 7 on the Russell. We clearly have more stocks in the lower part of their Bollinger Bands. That goes with a weaker market, but we don't have anything that's excessive down at the bottom that would suggest that we have any kind of a reversal coming. And if I look at breadth, while I can now go back to quite far in the markets to see. So you can see on both the NYSE on the left, NASDAQ on the right. The green is stocks above the 17, red stocks above the 200, white stocks above the 50. They're all kind of at a 50-50 level. And notice at market bottoms, they get very low. And at market tops, incremental tops, they get high. So kind of neutral there. When we look at new high, new lows, they are slightly positive. AD lines are negative, advances decliners. And if we look at up-down volume, negative on the NYSE, positive a bit on the NASDAQ. No major signal there. If I look at ratio charts to see where the strength in the market was, I think we're going to see that some of these defensive plays like staples, healthcare, um, real estate, utilities, not so much. I've started to move up some. Technology is making a really nice recovery. Financials and communications maintain relative strength. And you could see, right, I couldn't see the XLI. XLI has weakened. XLY discretionary, so discretionary industrials have weakened. Then I go into my layout, so I'm still long more than short. I am getting worried about double tops and how long this market has run, but I'm not shorting all-time highs. So I might want to look and see if there's anything to the long side I'm interested in. What I have here is my favorite layout, my high-low jump, the bongos. This is a relative strength, which you can see is 82. I'm just looking at one stock. 50 is white, 17 simples green, 200 simples red. Regular volume, my dots and trading systems, and then relative strength versus the spider moving with a moving average, and OBV with a moving average. Here is a list of stocks. It's my JAS list. It's about 3,500 stocks, and it's a combination of the NASDAQ, Amex, and NYSE. And I can look at various signals, including how many dots, what the bongos are, short-term momentum, medium and long-term, relative volume, on-balance volume when it crossed above the moving average, and the same with relative strength daily and weekly. So there's a lot of things that I like to do. I'll just look at one stock while I was sitting here. It was different in two different platforms. Okay. I like to look at the market, and I'll start with top down. So here I've listed on the left the sectors. On the right are the industry groups. Let's rank them by percentage. I could see that healthcare was number one, and I've got 680. Defensive was number two. If I add the two together, I have 814 stocks. And then number three was utilities. It takes me up to 902. So one thing I might want to do is start to do some analysis of this list. I might go in here and say I don't want to buy anything that's less than 500,000 shares. I want price greater than 5. I want price above the 200 moving average. I hit OK. I'm down to 216. And then I built in a number of trading signals. One of my favorites is a 2-day momentum. We run that one, and none of them on this list are there. Okay, let's find another one. How about a multi-time frame trading system buy? This is right here, the CPR buy. And I might look at these stocks and see if anything looks attractive. Cardinal is in a great move. You want to buy it on pullbacks. So you had a pullback here coming out of a squeeze. CPIX, I don't know who that is. Cumberland, don't know anything about that guy. HLN, Helion, big pullback breaking off here, cheap stock. McCormick and Schmidt. Notice this big move off the 200 after a big pullback. That's a pretty impressive candle, up 3.2%. Notice it's got volume breakout momentum. It has a CPR. Relative strength and OBV are turning up. Philip Morris, I can't buy it. I'm a cancer doctor, but pays a nice dividend. If you look in here, you could see that the dividend is, well, it says 0%. I think it's 4%. Um, and you can see earnings and revenue quarter over quarter growth. Turn that off. Like I said, I feel weird buying some of these bad stocks for cancer, so I don't buy tobacco. Southern Energy is moving up with the defensive plays, running up its 200. And these are requiring both this blue dot here, which is a daily CPR, and they have to be in a blue dot as the last signal on the weekly, which is back here. So by definition, I am looking at stocks with this scan that are in the top sectors that have both a weekly buy and just flip to a buy on the dailies. And the last one, TVPX, nice little flag forming here after a gap up. And I suspect that was on earnings. Earnings are not to the 20th. Okay. So of this list, probably the one that I like the best was Southern. So let's kill that. Let's add this to a hot list. All right. So one thing I could do is just look at the top sectors. Kill that. How about if we rank industry groups by return? And let's just look at the top 10. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. And you might say, but Jeff, nothing's showing up. That's because I've got all my filters on. So let's take off this filter. Let's cancel all the filters. So I have to put a fill all filters so I don't have to click the X. So this group here has 565 stocks. Another way to look at it is let's rank them by short-term momentum. Let's just go down the top bunch. PEN, big, big move in the market on Wednesday. Yep, that's a big gap up. You can see gap volume, breakout momentum coming out of a squeeze. Relative strength and OBV look great. High jumps a little bit extended. Crystal Biotech. This one had a big pullback, higher highs, higher lows here. Is this one getting ready to run? Might be worth watching. HIMS, what a breakout. Telemedicine for Mounjaro and sex issues. Um, and they're getting Lily Mounjaro. So this is an interesting story. But again, anything that says 100 up here is way too extended for me. Molina Healthcare, too far down. MTD. And I just go through the top bunch of lists. So again, this is top-down investing. I said I am long, kind of a little nervous about being long, and I'm looking at the top sectors and the top industry groups. So remember, healthcare was number one. GKOS, I believe, is in healthcare, and no dividend. But look at the move. Massive uptrend. That's healthcare. Pull back to the 50 and a breakout like this one. This might be one of my favorite ones. So I'm going to put that in my hot list. I'll continue going UTHR, like that one as well. Same reasons. Uptrend, sideways move, and breaking out. Vertex, talked about this over the weekend. Um, Expecting it to break out, has not yet. Lilly, um, like it here, sitting on the 200. So let's put that into the hot list. So that's another way to look at the markets is to make a list of stocks from the top industry groups. Now, that's all top down, and to me, that's the right way of doing things. The other option is to do it bottoms up. So let's just go into this list, and I'm going to go again above 200, price 5 over 500, price greater than 5. And let's look and see if we have any of these 2-day momentums. Let's just look at these. Six flags, GIL. This looks interesting. I thought clothing was doing poorly, but here is a very nice up move. Here is a pullback, then a breakout in the market on Wednesday. You can see it had a gap. I don't know why that's red. It should not be red. Volume breakout momentum out of a squeeze. Relative strength and OBV look good. And it's getting a little ripe and a little extended, but I do like that one. GILT, eh, SABL, Skyline Builders is an IPO. So let's just add gilt to the hot list. Let's kill my filters. Another thing I've just done is just rank this by relative volume, get the things that are really moving. TRNR, cheap stock. I don't like the cheap stocks here. So let's look at Zuo, buyout. Editas Medicine, one of the CRISPR stocks. There's a lot of interest in these stocks right now. This is a cheap biotech. Um, Ignore the 100, it's below the 200. This is making a move and break over that 200. Jet AI, yeah, Bumble, don't like the breakdown here. So I can look at by volume, but I also like that short-term momentum scan to start looking at potential longs and shorts. Got to bring this all the way up to the top. Let's just look at the top 10 and then say goodbye. So Penumbra, I love it. Looks great. I think it's extended, and I might look for a pullback. Garmin, I could say the exact same story. Advanced analog devices, not extended, expensive stock. Anything else that I wanted to show here? HIMS was the same way. And yeah, I don't like the reversal. So what we've now done is we've looked at the markets. We identified the risk related to double tops. Showed you how I look at the internals. A lot of things are different than some of the traditional technical analysis. Pretty much determined that, except for that double top, I don't see a whole lot of signals. New highs in the on the Qs and the spiders. That's pretty exciting. We looked at the industry groups and noticed that the more defensive ones were leading. And we identified a couple of stocks that I'll have on my radar for the morning. Um, Apple, I think this was already there, but I do like Apple as it broke above the 50, something to watch. They came out with the SE. SO, Southern Company, pull back to the 200. Now it's moving. Glaukos, beautiful uptrend, pull back, and now you have a chance to buy it. UTHR, um, big biotech, ran up, pull back, now moving up off the 50. Lilly, the makers of one of the GLP-1s, Manjaro, Gildan Activewear, Gildan big uptrend, pull back and a breakout. And then the lastly is Penumbra, which I thought looks great, but might be a little extended. So those are the ones I'm going to look at. That's what I got from my top-down analysis. Hope you like the new tool. Please leave comments. I've got about 10 beta testers. We'll be finishing in the next week, and then we'll see about bringing this to the market. Everybody have a great, great, great in the market on Thursday. And I think it's time to be careful.